what's going on with Supermicro Computer, ticker symbol SMCI, because as you can see right here on the screen, the stock is down 28% since it peaked at around $1,200 a couple of weeks back. Now you can also see that right now, as of today's prices, we are not overbought anymore on the weekly. Previously we were overbought for quite some time and still the stock went up and up and up. It had momentum, whether it's because of AI hype or their own results or Nvidia's results as well. And of course, we're also going to talk about the recent announcement that they made during Nvidia's GTC. Now, if we're looking at the daily graph, you can see that RSI is now at 46, so neutral-ish. We can also look at the 200-day moving average, which sits at $445, the 50-day one at $791, and the 20-day one at $986, which are now well under that. So maybe the stock will try and find some support here at the 50-day moving average. Now, currently, this is the state of the stock and the company. Market cap of just under $50 billion with a forward PE of 32.6 times. Forward EV to sales 2.6 times. Now, if you look at what the analysts are expecting for the coming fiscal years, you can see that for fiscal year 24 and 25, huge boost with regards to sales. So for fiscal year 2024, sales should increase by triple digits, 103, close to 104% year over year, with another 38.5% year over year growth expected in fiscal year 2025. With regards to EPS, a bit of the same, lots of growth, fiscal year 2024, then less growth, but still quite respectable, 37.45% in fiscal year 2025. But then looking at fiscal year 2026, growth rates basically decelerate quite a lot, top and bottom line. Now, I've showed you this in the past already. Yes, if you look at valuation metrics such as forward PE, EV to EBITDA, price to sales, price to free cash flow, and then the PEG ratio, you can clearly see that it is now way more expensive than the 5-year mean. Now, before, of course, it did not get such a huge boost with regards to, well, AI, data centers and stuff like that. So that might explain why the stock is now more expensive than before. That said, if we look at one of their major competitors, Dell, we've talked about Dell in the past on the channel as well. I'm going to touch on some Dell announcement later in this video so you get a bigger picture, but you can see that Dell is less expensive than SMCI on the forward PE, EV to EBITDA, price to sales, price to free cash flow, but PEG ratio is the only one that is a bit more expensive. Now, Dell today is also more expensive than its own 5-year mean, going back to my explanation of these businesses get now a huge push thanks to the AI adoption. Now, you also should know that these things go in cycles. Once we've reached the top of the cycle, whenever that will be, I don't know, expect things to fall down quite fast. And these are not businesses with a super high margin profile. Actually, not high at all. Gross margin, I believe, for SMCI sits at around 15-16% or so. For Dell, it's a bit higher, but both with regards to net profit margin, it's about the same, still single digits. So that's all with regards to the quick introduction, the state of the stock and the company. Now let's have a look at the reason why the stock is actually down quite a lot today and in the last couple of weeks as well, despite it now being included in the S&P 500 index. Now, before jumping into that, if you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, first of all, let's go back to end of February, where SMCI Supermicro announces pricing of private offering of $1.5 billion of convertible senior notes due 2029. What does that basically mean? Well, they issued debt, essentially borrowing money through convertible senior notes. These notes mature, come due in 2029. This is not them diluting shareholders, by the way. The company expects to use most of the money, around $1.47 billion or so, for general business purposes. A smaller portion, around $123.6 million, will be used for a financial strategy involving capped call transactions, which we've talked about with regards to SoFi. So overall, this is a way for Supermicro to raise capital without issuing more stock, which of course can dilute existing stockholders. And yes, of course, they took full advantage of the fact that their stock has gone up quite a lot recently. And so more recently, we've got this: Supermicro announces proposed public offering of common stock. Now this is a bit different. So here Supermicro is planning to issue 2 million new shares of their common stock. This increases the total number of shares outstanding, which means shareholders get diluted. And as you can see today, this affects the stock price as well. Goldman Sachs is acting as the underwriter, which means they'll manage the selling process for Supermicro. The company might also grant Goldman Sachs the option to sell an additional 300,000 shares depending on market conditions. Overall, this is a way for Supermicro to raise capital by selling ownership stakes, shares in the company, to the public. The additional shares will of course dilute existing shareholders' ownership percentage, but the new capital can fund Supermicro's growth plans. Again, in the short term, yes, this is a negative thing, but in my opinion, seeing how fast the stock has gone up, management thought this was the best opportunity for them, and in my opinion, they did the right thing. Now, going into the announcement that they recently made during the Nvidia GTC event, by the way, the supercut is available on the channel around 19 minutes or so. I highly suggest you go watch that. First up, we have here Supermicro launches 3 Nvidia-based full-stack ready-to-deploy generative AI superclusters that scale from enterprise to large LLM infrastructures. So the full-stack superclusters include air and liquid-cooled training and cloud-scale inference rack configurations with the largest Nvidia Tensor Core GPUs, networking, and Nvidia AI enterprise software. We've seen that yesterday during the presentation. To be honest, these things should be going into a museum. Maybe they should open a museum purely based on AI development and these types of technologies. Supermicro's CEO said that in the era of AI, the unit of compute is now measured by clusters, not just the number of servers, and with our expanded global manufacturing capacity of 5,000 racks per month, we can deliver complete generative AI clusters to our customers faster than ever before, which of course is also one of the main reasons why you've seen this stock go up so much, because the business is doing much better. Then number 2, Supermicro grows AI optimized product portfolio with a new generation of systems and rack architectures featuring the new Nvidia Blackwell architecture solutions. So powerful and energy efficient solutions for large scale CSPs and NSPs incorporate a full stack of next gen Nvidia's GPUs and CPUs with the Nvidia Quantum X800 platform and Nvidia's AI Enterprise 5.0. So here, Supermicro is enhancing its current Nvidia HGX H100, H200 8GPU system to be drop-in ready for the Nvidia HGX B100 8GPU and enhanced support for the B200, resulting in a reduced time to delivery. We've seen that yesterday during the event as well.
And it goes into 2 types of systems. The first one is form-fit-function compatible to Hopper. And so you slide out Hopper and you push in Blackwell. That's the reason why one of the challenges of ramping is going to be so efficient.
What also got revealed yesterday, and he hinted a couple of times at Michael Dell being here in front of him when he was presenting, well, Dell, of course, they came out with their own product offering. Dell not only does what SMCI does, Dell, of course, if you're a personal consumer of PCs, you know that Dell also sells those types of things direct to consumers, not to those enterprises. They do both. Now, like PC rivals HP and Lenovo, Dell is getting ready to roll out AI-powered personal computers later this year. This is what I've been talking about for the last couple of months. We're going to see some nice increases for the likes of, well, HP, Lenovo, Dell, but also I believe Intel and AMD will definitely enjoy some tailwinds from the new, let's say, refresh cycle with regards to AI PCs, Windows 12, etc., etc. Dell also unveiled a platform it calls Dell AI Factory with Nvidia. The new offering combines Dell servers, storage, PCs, software, and networking with Nvidia AI infrastructure and software. Dell said the platform is intended to help enterprises quickly capitalize on AI investments. Dell also said it is working with Nvidia to offer liquid-cooled systems based on Nvidia's new GB200 superchips, which were also unveiled today. We're going to see a lot of liquid-cooled systems in the coming years. So overall, that's it. That's what's going on now with SMCI. Of course, the stock could find maybe a bottom at the 50-day moving average or could rebound right here. Right now it is a bit neutral during the day, flip to a little bit of green. We can see that back here at the beginning of March it had a big jump, so that's a gap that potentially could be filled. Again, not all gaps get filled, but most of them do. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Let's see you all in the next one. Bye bye.